The Bank of Korea has decided to hold its key interest rate steady at 3.5% once again, the longest ever. But its governor today hinted at a potential policy shift. Our finance correspondent Lee Soo-jin has this report.
South Korea's central bank has yet again left its benchmark interest rate unchanged at 3.5%. The decision was announced on Thursday following the first Monetary Policy Committee meeting for the second half of the year.
We have decided to maintain a tightened monetary policy as there is still a need to monitor inflation, as well as the impact of rising household debt and the volatile foreign exchange market.
This is the 12th consecutive time that the BOK has decided to freeze the rate. The base rate was last raised in January 2023 to the current 3.5% and has been left steady since then. The rate freeze decision this month comes despite inflation showing signs of easing. South Korea's Consumer Price Index, a key gauge of inflation, rose by 2.4% in June compared to the same month the year before. The rise in consumer prices hovered above 3% at the start of the year before dropping below the 3% mark in April and remaining in the 2% range for 3 consecutive months. And the June figure was the lowest seen in 11 months, inching closer to the target inflation figure of 2%. But ongoing concerns about household debt and the largest ever interest rate gap are deterring the BOK from rate hikes. In June, household loans from 5 major commercial banks in Korea, KB Kookmin, Shinhan, Hana, Uri, and NH-Nonghyuk, surged by more than $3.8 billion, the largest on-month rise since July 2021. According to one expert, lowering the interest rate would have exacerbated the current situation.
Chances are people will take out more debt to take an opportunity to buy housing. So it will not only increase household debt, but also probably drive up housing prices, especially in the Seoul metropolitan area.
And the U.S. Central Bank in its most recent June meeting decided unanimously to keep key interest rates at the 5.25 to 5.5% range, marking the 7th consecutive meeting where the Fed has kept its interest rates at the same level. This has left the rate gap between the two countries at its highest ever at 2 percentage points, raising concerns that the South Korean won could continue to weaken against the greenback. And these concerns about household debt and a weakening Korean won are what may delay the BOK's rate cuts, a possibility that was mentioned in an official setting for the first time in nearly 3 years during today's press conference by the governor. Moving forward, the BOK plans to not just monitor inflation, but to also consider the nation's economic growth and financial stability when deciding when to cut interest rates. Lee Soo-jin, Arirang News.